So as some of you know, I bought Amazon at pretty much an all-time high. I made a video about it because I was pumped up, and I showed exactly what I bought, $23,000 worth of Amazon. Got destroyed from that purchase. So I kind of want to talk about that and talk about some lessons from it that maybe you can learn, and also why I'm not fazed by it. So why am I down so much? Well, actually, this isn't telling the full story because this is a lot from not just my Amazon, but my Tesla shares there, which are down quite a bit because Elon decided to tweet out that he doesn't think the price should be worth 800 and something that it was, and so now it dropped 100 plus points to 700. But let's talk about Amazon, one loss at a time here, guys. So Amazon, I bought it at around $23.80, something like that, and so I am down a total of 4%. I was down 7.6% though on Friday. So why was I down so far? Well, I bought Amazon ahead of earnings. So I bought ahead of their earnings, and I thought their earnings per share estimated was low by analysts, and so I thought, hey, you know, it's a good time to buy ahead of the earnings because I thought earnings were going to do better than what the street thought, in which case the price would go up. Well, the earnings per share did not do as good as the street thought. It did worse. Revenue did much better, which was what I was focused on, but earnings per share has to do with profit. So I didn't realize how much Amazon is spending to try to fix its supply chains and costs associated with the COVID virus. So EPS was less than expected. Revenue was much higher than expected, and the price went down for the stock. So here's the thing. I don't buy only for one reason. I will never trade a stock ahead of earnings or something like that for the only reason of believing I'm going to get a bump, right? So that is not how I do stuff, and although I'm down a lot here, I am not worried about it. So let's talk about some quotes that I think are really important by Charlie Munger, who is Warren Buffett's business partner, and how I want you guys to be thinking about investing. I'm not an advisor. I am someone that believes in a few principles that are going to help you find more success overall, and that's why I'm making these videos. It's not to make money on YouTube, and I'm not going to try to make a video on every single stock that I know nothing about to try to get more views and get more clicks. I'm here to try to help you. So if you can like this video, I would appreciate. Subscribe. I'm trying to share exactly what I'm doing in my portfolio, and so you can have success, hopefully, or you can at least learn what it takes to have real and build potentially real wealth for yourself. So let's kind of get into it. I am the anonymous investor emoji here because I am trying to show you my full accounts and show you everything transparently, and I would just feel weird if I also showed my face, and I don't want to come off as bragging or anything like that in any way. So that is why I'm anonymous. So let's kind of break it down here. So Amazon is down a lot, 7.6%, mostly in after hours. So that means that when the bell closes, when the stock market closes, that's when companies will report their earnings. That is when Amazon got absolutely hit. But here's the thing. I don't buy stocks to trade them, okay? I am not a trader. I'm not buying and selling thinking I know things that the rest of the market doesn't know, because most of the time you don't. If you look up people that have traded stocks, you'll see some really awesome, cool stuff, and people being like, look how much money I made. But the stuff that you also don't really see is when people are like, look how much money I lost. If I do a Google search of the most popular traders of all time, I might come across a guy named Jesse Livermore. So Jesse Livermore was an American trader famous for both colossal gains and losses in the market. I think he made like $100 million in the market, which at the time was a lot, essentially billions, and then lost it and committed suicide. Now, this is not the fate of all traders, thank God, but trading is a game of highs and lows, and that's not what I'm about. I'm about investing. And I also did the search because I don't really know about traders, right? I don't really know billionaire traders, but you know a lot of billionaire investors like Charlie Munger or Warren Buffett or Ray Dalio. So what we're going to talk about here are these quotes right here, which were important for me deciding to buy Amazon or just any stock in particular. So the first thing is knowing what you don't know is more useful than being brilliant. So what you need to know in the stock market is that you don't know a lot. All right, this is very key. When I bought Amazon, I bought it knowing that I don't know a lot. Okay, I don't really know how much profit they're going to make in their earnings per share. I don't really know what the immediate future is going to be like. I don't know a lot of stuff. And analysts probably know more than me in the short term, right? And they know more than me in the long term too, but I'm buying not for the short term. And it's way harder to know things in the short term than in the long term. And let's just take this as an example. 5 days ago of Amazon, I don't really know what's going to happen in the short term. Am I going to have a positive green day? Is it going to go into the red? Am I going to have green? Is it going to go up? Is it going to go down? It's really hard to see any trends. It's really hard to see the bigger picture. So what you have to do to see any bigger picture is you really have to zoom out. And when you zoom out in life and in the stock market, you can start seeing trends. You can start seeing a clearer indication of what's going to happen. Your likelihood of prediction will go up dramatically if you can zoom out. Same goes in life, right? We are incredibly motivated by things that happen in our day, right? We are up and excited when we get a compliment, and then we feel bad when someone says something negative about us, and all of this stuff totally changes our emotions, totally changes our mood, when we really just need to be thinking long-term and bigger, and does this even really matter? And so in stocks, I do the same thing. You don't know what you don't know, but if you can zoom out and take a bird's eye approach, you can see things a little bit clearer. Next thing is, one of the greatest ways to avoid trouble is to keep it simple. I really believe this because you don't know what you don't know. So stop trying to create all these other variables and try to keep things simple. I keep things pretty simple, right? I buy the companies that I believe in and I stick with them. I've added Amazon because I've wanted to add it on for a while. Besides that, you'll see I buy indexes like VOO, which is the S&P 500, which is my #1 holding. And these are all from an automated intelligent advisor, which is Schwab's Intelligent Portfolio, which is a robo thing that just I put in 10K a month and it automatically puts money in and diversifies for me. The next line is something I really believe a lot, is that a great business at a fair price is superior to a fair business at a great price. I believe Amazon's a great business, and I think it's okay of a price. So I was fine to jump in when I did. Success means being very patient but aggressive when it's time. So I am definitely patient. I am young. Most of you guys watching this are pretty young, under 40 for the most part, and you gotta be patient, because that is where success comes from. You got to be aggressive when it's time, but you got to be aggressive only towards your best ideas, okay? So not aggressive towards any ideas at any time, but being patient and aggressive towards your best ideas. So what I'm doing right now for my portfolio is I'm dollar cost averaging into it. So basically every single week I am putting an amount. Every Monday I put in, because I just want to be in the market. I want time in the market instead of timing the market. But if there is a great opportunity, I will invest more and deploy more of my cash. As you can see, I am mostly still in cash. And the next one, the big money is not in the buying and the selling, but in the waiting. So the big money is not in trading stocks and buying and selling and doing all these things, but in the waiting. If you look at the billionaire investors, they didn't get there from betting on something and flipping it and then betting on something else and flipping that and doing all of that crazy stuff. The money is in the waiting. It's in letting the companies grow and being part of that. And so in knowing that, I am happy to be in Amazon, a great company that I believe in, that I think is a fair price. And I know that I don't know a lot, so I need to keep it simple. And I am buying what I believe in, and I'm sticking for the long haul. So a lot of that goes against how people react to the market. It goes against our human nature to want instant gratification. It goes against the whole YouTube algorithm of trying to make videos of every single stock and trying to get people to click and watch the videos. There's a lot going against it, but if you want good returns and you want to actually build wealth and do it in a way that doesn't potentially cause you to want to commit suicide like the top most popular trader, then I recommend that you try to use the principles that have worked over time, that you be patient and you don't let your emotions get the best of you. And at that, I think I'll leave it. Those are my Charlie Munger's quotes for why I was okay with buying Amazon and losing a good deal of money on it. I'll talk to you soon. I'll probably make a purchase on Monday, so please subscribe if you want to check out what that will be. I'll see you soon.